Hey everyone, Nick Lansing here, and in this video I'm breaking down our latest land development fund and how we're targeting over 22% IRRs with the goal of doubling investor capital, just like we've done consistently for the past 40 years. So I'm excited to walk you through the strategy, the actual projects that will be in the fund itself, the land deals, and the structure behind everything. By the end, I think you'll see exactly why investors keep coming back. So this is just our Lansing Capital Group disclaimer. If you've seen one, you've seen them all, but I don't want to bore you with the details. If you really want to dig into it, you can pause the video and read it, but we're going to jump ahead here. Okay, the agenda. Just a quick breakdown of what we're going to be covering. Slide 5 kicks it off with a big picture, who we are, what we do, why we launched Lansing Capital Group. Then we're going to introduce the executive team, the team with over 40 years of land development experience. From there, we're going to walk through our track record with actual case studies, the real deals, real returns, and how we consistently create value. From there, we're going to go into the fund key terms, how it's structured, the return model, and what you as the investor can expect from us. We're going to move on there from why we focus exclusively on land, the market forces behind it, the risk profile, and what makes this strategy stand out, especially right now. And past that, we're going to dive into the current opportunity, market details, all that juicy stuff, and then finish it up with a quick conclusion. And then a little bonus at the end where we're going to break down the 4 land deals we already have under contract that's going into the fund. We'll walk through the plans for each site, what we're doing to unlock value through entitlement, the targeted returns, and what makes each deal uniquely positioned to win. So this is where, our strategy meets execution and where you see exactly what you're investing in. Moving on to the introduction. Lansing Capital Group is essentially just the private investment arm of Lansing Companies. It was created to give investors access to deals that, for the life of Lansing Companies for decades, were reserved just to our inner circle, our friends and family. So this fund marks the first time we're opening the door to a broader group of investors like you. And we specialize in off-market land acquisitions, going through the entitlements and creating development plans for residential and industrial use. The edge we have is we have 40 years of success. I don't know a lot of operators who's been doing the same kind of business for 40 years. So we really know how to unlock value where others can't. And what sets us apart is our structure. It's a true investor-first model, meaning your returns, your profit always come first. We don't do any management fees, no GP catch-up, nothing like that. You get a preferred return, and we don't make a dollar until you do. So we're only making money on the profit split after we return all your money and your preferred return. And in the 40 years of Lansing Company's business, we have never lost an investor's capital. Part of the reason we continue to win is, we have those deep political and industry relationships. So we get early access to land before it hits the market, get the best value on that land. And sometimes we have that insider knowledge on any zoning or infrastructure changes just because we're in the same room where these decisions get made. We know the right people. So at the bottom here, you can see our historical track record. Just going to run through it really quickly. 40 years in business, over $1 billion in total capitalization, hundreds of projects completed. Again, throughout those hundreds of projects, never lost an investor's capital. Never lost an investor's capital in hundreds of projects over 40 years. Throughout those projects, 150,000 lots entitled, over 40,000 acres developed, and 25 million square feet of industrial developed as well. Okay, I'm going to keep this part brief. I don't really like talking about myself here, so let's run through it. So quick background on me. I've been in land development for over a decade now, focused on acquisitions, capital raise, and primarily investor relations. So, I've helped first-time investors put millions to work, manage capital from dozens of private investors, and consistently deliver double-digit IRRs. To date, I've been involved in over 1,000 acres of land deals, which totaling more than $50 million in value. And every single project I've been involved in has delivered at least double-digit IRRs. But let's move on to the man that makes it happen, Greg Lansing, my father, founder of Lansing Companies and the real engine behind what we do. Again, he's developed over 40,000 acres, sold over 150,000 residential lots, and managed over $1 billion in land assets. He completed his first project as a teenager. He's the type of guy that he goes on vacation and he misses the work, he misses the office, he loves what he does. So he brings not only deep relationships and political access, but also a level of strategic advantage that few others, if any, really have. Some important things: he's never lost investors' capital. I can't stress that enough. Not a lot of people, not a lot of operators in the business this long can say that. And he believes in his product. He reinvests 90% of his net worth back into our deals. So really putting our money where our mouth is. And that's who you'll be investing alongside. Moving on to a few of our executive team members. This is the team that makes it all work. It just isn't the deals, it's the people behind driving them. So we got Kirk Spots, our CFO. He leads all things financial strategy and execution. We got Casey Malone, our project manager, the engine behind the entitlements, taking each project from concept to completion, really digging into the land, making sure we can develop what we want to develop there. Mark Claremont, our general counsel, is behind the scenes on every contract, every agreement, every risk check, really protecting us and you, the investor, at every single stage. And then Jim Kozak, a partner for over 25 plus years in land development, really just helps us zero in on the best opportunities before others even see them. So, I mean, just the bottom line here, we've built a sharp, experienced team, a really high-level machine here, knows how to execute at a high level, and we've got investor protection built in from start to finish. And these are just a few of the people who helped make this happen. Moving on to our track record. Just a few of the items that really set us apart. First, over 40 years of experience with deep strategic partnerships across Southern California. We know how to align with the cities and the regional growth plans to get projects across the finish line. Second, our returns just speak for themselves. I mean, the last 20 deals have averaged 75% annual appreciation and a 50% IRR. These aren't theoretical numbers, but actual performance. From there, we've delivered all of that while protecting capital. We've never lost a single investor dollar. That's part of our risk management and, having a sharp eye for value, knowing what we're going to do with the land before we even close on it. From there, we've built a legacy in this space. Lansing companies, again, have developed over 40,000 acres, sold more than 150,000 lots, and we have high investor loyalty. About 90% of our investors come back for multiple deals. That's the biggest vote of confidence we could ask for. Moving on to the actual track record here, we're going to go over some of the deals. Well, I'm going to focus on actual averages down here. There's quite a bit of information, but these are the previous 13 deals. You can see that we're purchasing them for about $5.6 million. And when we're all said and done with our entitlements, our value add, selling them for just under $15 million, doing that in a 3.5-year time period from getting under contract, closing, doing our due diligence, entitlements, and finally selling, 3.5 years. And you can just see the appreciation. Let me move out of our way here. Our percent on the deal increased by 264%, so almost triple, 2.5 to triple our initial buy-in. And then what that translates to on an IRR is a whopping 50% on the deal level. Moving into case studies, actual deals that we've recently sold here. This is one of our biggest recent wins called Villages North, located in Winchester, California. We love Winchester. And we acquired this 162-acre site in late 2020 for $6 million. It had some major challenges. One of the major challenges was there was no sewer infrastructure, so we had to work closely with the county to solve that issue. We had to bring it about a mile, negotiate fees, see how that would work. And the result after we solved all the problems, we successfully entitled it for 527 single-family lots, and delivered smart, cost-effective designs, helped enhance the regional infrastructure for long-term growth. One of the key value drivers here was patience and strategy. By holding the project for an extra 12 months, we created an additional $8 million in profit and ultimately sold it to Lennar in December 2024 for $32 million. So if we're talking actual numbers here, total hold period from first getting it under contract, 4 years, and that translates to an investor ROI of 230% with an IRR of just under 35%. And we underwrote the project lots, each lot at $44,500, and all said and done, we sold at over $60,000 per lot. So it just goes to show you how conservative we underwrite our projects to what we actually end up delivering for our investors. This deal is just a perfect example of how we handle complex entitlements, navigating local politics and huge infrastructure hurdles, and still deliver huge returns. Even when the road gets a little bumpy, we know how to solve those problems. Next one up is Skyborn Village 3. This one's a perfect example of what we mean by a clean, high-return entitlement deal. So Skyborn Villages was in Desert Hot Springs, a fast-growing market near Palm Springs. Bought the site in January 2020 for just $800K, and it was part of a larger assemblage we had deep insight on, deep knowledge in there. Our team entitled it for 216 single-family lots, kept the budget pretty lean, just $200K for our value add, and we executed the plan flawlessly. Classic entitlement play here. I mean, we picked the right submarket early, aligned perfectly with buyer demand in that area, and navigated the process efficiently to maximize our land value. Ended up selling it again to Lennar in October 2023, and the results speak for themselves. 51% IRR and over 340% ROI for our investors. Total investment was just $1 million. Total hold period, 3 years and 9 months. I mean, this deal just shows our ability to spot overlook land, execute fast, and deliver an example of what we're going to try to put into the fund here, and we'll get to that at the end. We got 4 beautiful deals we're going to be talking about. Moving on to Hemet 33. This is a current project we're executing right now. It's an industrial site positioned for indoor and outdoor logistics use. We acquired it for $3.3 million earlier in last year, 2024, and it's already shaping up to be a high upside play here. And what's unique here is the timing and kind of the insider info we got. This site is directly in the path of growth. We're riding the momentum from federal infrastructure investments going to this location, coming from RCTC, which is Riverside County Transportation, and Caltrans. That alone is boosting the site huge in value. We're designing the site with flexibility, so it appeals to a wide range of logistics operators, and it's a big draw in this region. Not a lot of this kind of development with a huge demand for it. So just the quick financials here. Total investment 3.9, projecting a $12 million sale. Timeline is going to be roughly 2 years. With that being said, IRR will break down at 53% for our investors with a target ROI of 134%. And again, classic example of how we leverage relationships, policy insight, get that early information, and just time it right to capture value that others miss and move fast before the rest of the market catches up here. Okay, introducing the Lansing Land Development Fund. We're targeting 4 to 6 properties. Again, we have 4 under contract we've had for quite a while now that we're getting ready to close on. We've all done our due diligence on it. Very attractive deals. All focused on, again, raw or lightly entitled land with strong entitlement potential. Targeting a fund size between 15 and 20 million, and we're keeping it pretty simple. 100% equity funded, no debt, no leverage. Don't want to risk it with anything like that. We're already buying at such a great value when it makes sense to do that. And that just gives us flexibility and downside protection. So our typical hold period is 2.5 to 3 years. Some of the deals in the fund, we'll get to it, but they should start generating profits even earlier than that. So you could start seeing returns about 1.5 years into the fund with the total closeout date looking at 3 years. Just enough to unlock value through entitlement without tying up capital too long. And this is a strategy we've been doing for decades, acquiring off-market raw land in high-growth areas, push it through entitlement, and exit to the builders. So we're focusing on California's Inland Empire, specifically Riverside and San Bernardino counties, where demand is strong and there's not enough supply. So cities are actively pushing for development. That's where we come in and we solve these problems and get it developed for them. So just a little more on the fund terms here. Minimum investment of $100,000 for Class A shares, and then it'll step up past that. Term again is 36 months. Should see distributions a lot earlier than that, targeting 18 months for the first sales. And we're aiming for a strong performance, conservatively 22% targeted IRR with over double total return. And this is what really sets us, one of the things that really sets us apart is no management fees. I see a lot of other groups out there just charging management fees, doing catch-ups. I mean, they're making money whether you do or not, but that's not how we do things. We're offering a 10% preferred return that accrues annually, and then there's no GP catch-up. We're only making money if you make money, and that's passed after you get all your capital back, your preferred return, and then past that, it's a profit split of 60 to you, the investor, and then 40. So in short, no fees, no fluff. You get paid before we do. You're our top priority. So in terms of timing, we're not waiting, until year 3 for all the returns. As we sell off individual projects, profit events will happen along the way. So some of the earlier deals, as I mentioned, projected to exit around 18 months in. Well, later ones may go for the full term at 3 years. So you'll start seeing movement well before the fund wraps up. Okay, key steps in the investment process. This is what sets us apart again. It's built to maximize both efficiency, upside, and minimize risk. So step 1, sourcing off-market land deals. Thanks to decades of relationships and boots-on-the-ground experience, we find high potential properties that never hit the public market. Step 2, we negotiate the PSA. Not just talking about prices, we negotiate hard to secure favorable terms, lower costs, protect the downside. I mean, by the time we even close, we're already in the green. Step 3, we conduct preliminary due diligence. That means digging into zoning, environmental factors, infrastructure, development constraints, making sure we could do what we want to do with the land before we ever even close. Step 4, we close on the land. That's where you guys come in. So after we've done all our due diligence and we got a very good idea of what we're going to do and the returns we're going to make off our entitlements, we bring in investor capital. That's after several months, sometimes even past a year of due diligence. We bring in the investor capital and close on the land. If everything checks out, move forward to step 5, move into the entitlement process further down the line here. This is where our experience shines. We secure development rights, coordinate with the city and county officials, and push projects through approvals to unlock value. And once the land is entitled, we market and sell to builders. By the time we get to this stage, we'll probably have 5 or 6 builders lined up. It's such a hot market that we'll have competing offers. We got to choose the best. And this is the playbook we've used for the last 40 years. It's how we've consistently delivered outsized returns without taking on extra construction or debt risk. Okay, the opportunity. Riverside County, California market opportunity. Riverside County is one of the most compelling land markets in California right now. First, the county is undergoing major economic transformation. For the last decade or two, it's beyond its traditional roots in construction and agricultural, and it's becoming a diversified hub for logistics, healthcare, renewable energy, advanced manufacturing, you name it. A lot of money, a lot of new jobs is shifting that area, driving long-term job and population growth. Second, this is where we come in, there's a huge housing shortage. Riverside County is falling behind on their state-mandated housing goals, especially under RHNA, Regional Housing Needs Allocation, and that simply just means there's not enough entitled land to meet the growing demand. And that demand is accelerating. People are moving inland for affordability and quality of life, and population is growing fast. And finally, the cities and the county, most part, want development. They know they're behind. They're actively supporting projects like ours to help meet their housing requirements. And this is where our mission ties in perfectly. We're not just chasing returns, we're helping families find homes, we're supporting job growth, and we're building lasting communities throughout Southern California. So I mentioned RHNA before, Riverside County Needs, Regional Housing Needs Assessment, and this is where the opportunity and responsibility really come together. The state mandates something called RHNA, and it's the housing goals based on projected population growth. So Riverside County is way behind, meaning more people are moving there, demand keeps going up, and their supply is falling. So Riverside saw the largest population growth in all of Southern California from 23 to 24, and by 2028 it's projected to hit 2.5 million people. And affordability is driving a lot of this. People are moving inland from LA, Orange County, even San Diego. Riverside has become a hub for first-time home buyers and working families. Even between 2010 and 2017, over 21,000 millennials moved to the area. So, here's the kicker. Riverside County added over 300,000 residents between 2010 and 2020, making it the fastest growing county in California. And so not only real demand, but the state is also applying pressure. So you kind of got a twofold opportunity here. Cities are open to development and far behind. Families are ready to move in. And that's where we come in, solving those problems, unlocking land, getting it entitled, and help closing that housing gap while delivering strong returns. So this chart makes the shortage crystal clear. Riverside County is required to build over 167,000 units across all income levels, but have only issued a little over 22,000 permits so far, and they're almost 40% through their cycle. So across every category, county is falling dramatically short. So this backlog is creating urgency for cities to entitle land and fast-track development. So some more market conditions here. Riverside County is projected to have the highest rate of growth for all of Southern California over the next 4 years, over 2%, which is going to add another 52,000 new residents by 2028. I mean, when you compare that to LA County, which is actually projected to shrink a little bit, you see the shift happening here. People are leaving those overbloated cities and moving inland for affordability and opportunity. And it's not just population growth. Median household income in Riverside has been climbing every year and now approaching 90,000. That means we're not just seeing more people, we're seeing more qualified buyers with higher earning potential for that market. And this is exactly the kind of environment where land values move fast and entitlement adds real immediate value. But this really comes down to trust, access, and performance. So, first we're 40-year operators. Our team has been through multiple market cycles, and we've built long-term relationships that give us access others don't have. Second, we only invest where we know the land. We specialize in SoCal's entitlement landscape, and our local expertise helps us uncover value where others overlook it or just, they don't see it. Moving on, our track record speaks for itself. Consistently delivered strong returns without ever losing an investor's capital. That's not just luck. If it happens 1 or 2 times, maybe you could call it luck, but hundreds of deals over 40 years. It's discipline, it's strategy, it's experience. And finally, for the first time ever, we're opening this up to the public. Previously these types of land deals have always been reserved for insiders, our close friends and family, but that's just changed. And so if you're looking for, access to something smarter, more strategic, and built on 40 years of doing it right, this is it. So now we're going to shift over to the actual deals going into the fund, the deals we have under contract. So let's get into it. Okay, so the potential land acquisitions going into the fund. Now, most of these deals we've had under contract for several months, I think even one of them for 15 months, and that whole time we're doing due diligence, we're talking with the city, we're really digging into the land, really mitigating the risk for you as the investor, as well as obviously us as the developer, making sure we could get the entitlements we want. Okay, this is one of the 4 projects going into the fund, and it's a perfect example of why this strategy works. Bell Meadows, 459-acre site in Mead Valley, just 2 miles south of the future Mid-County Parkway. That'll be a new major east-west connector, and this whole area is about to blow up. It's about to be open up for new development, and we're already in the perfect position for it. That's kind of that insider knowledge that we get there, knowing the right people. And right now it's zone rural, but we're not guessing on value. We're creating it here. We're applying our usual playbook. Buy underutilized land at a deep discount, then rezone and plan for what the market is starving for: entry level housing. And there's a shortfall of over 51,000 affordable homes in this region alone. So the state is pressuring cities to get new projects approved, and we have two clear paths here. Option one, the go for it, the home run here. We're going to entitle it, do some zone change, general plan amendment, and try to get 1,500 small lots here. And again, the city's starving for housing, so we're going for the higher density. But we're not underwriting the project for that, but that's what we're going to hope for. We're going to shoot for that, and it's been receptive so far, so we're feeling good about it. And then option two, kind of our fallback here, what we're legally just as it's zoned right now, no stress of going through a zoning change or anything like that. We could file a 249 large lots, and with the new state mandated ADUs, it's perfect for build for rent crowds. So that would be an exit of about 18 to 24 months, and either path really hits on success. So cost basis is incredible for this site. We're in at just $5,000 per acre. That's unheard of in this market. So I mean, the paper lots are going for up to $70,000 per lot. So really incredible deal here. And even underwriting it as our option B here, our second option with the 249 lots, we're projecting 227% ROI in 2.5 years. Moving on to Winchester Mirage. This is a bread and butter textbook entitlement value play with a lot of built-in upside. So we're purchasing 78 acres, about half of it usable, and we're just entitling it for 170 homes. Exit strategy is simple: sell to a national builder post-entitlement after we've cleared everything up. And just like we've done right across the street, we just sold to Lennar. And what makes this one really stand out is the insider advantage. So we sold those 500 lots across the street to Lennar. I mentioned that earlier in the presentation. And part of that project, they're now installing a main sewer line that goes right up to our site. So we get the benefit of it without even paying for it. So, I mean, if people knew about that, we'd be paying a lot more for this land. So most of the market doesn't even know that utility is coming in, but again, we do. We're ahead of it, and Winchester is one of Southern California's fastest growing markets, so builders are very aggressive in this area. So we're projecting a 147% ROI over a 2-year hold on this one, and it's already drawing interest from major builders. I mean, Lennar even is looking at this site again. Can't get enough units out there in Winchester. So this is how we find overlooked dirt and turn it into highly sought after land with builder demand just baked right in. Okay, Beaumont Commerce Center. This is our industrial play in the fund, and it's already well underway. We're acquiring 143 acres just outside of Beaumont in Riverside County for $5 million, and this is part of a larger land assembly that we already own most of the land around it or control it. Our strategy: annex the full assemblage into the city of Beaumont for industrial zoning. Now this will unlock major value as we position the site for big box industrial buyer. And we've already been at work for this for over 15 months. You're getting in on a deal that's already underway for 15 months. That's a huge de-risk with the groundwork already in place. We're expecting a 2 to 2.5 year entitlement timeline and clear exit path. And what makes us even stronger is the city is fully behind us. The project creates jobs, tax revenue, and critical new roads connecting Highway 79 and Highway 60. That's a major infrastructure goal for Beaumont, so they're looking to us to help solve their problems there. And this market is hot for industrial. Demand for large-scale industrial in the Inland Empire in general just continues to outpace supply. So projected exit, projecting conservatively $19 million with a total investment of $6 million, including entitlement and hold. And the projected ROI is over 220% in 2.5 years, investor ROI right there. And that's why we love industrial entitlement: clean path, real demand, and massive value shift. So final deal going into the fund, and it's all about smart planning and fast execution. This will probably be one of the first, if not the first, acquisition in the fund. And McLaughlin South sits on 143 acres in Riverside County. It's part of a larger land assembly in Menifee, one of the fastest growing cities for new housing. But here's the kicker: it's already approved for 91 lots, so that's our backup plan, worst case scenario. But the engineering was terrible on it. The plan was very costly, so we're going to add value and change things up there. But we uncovered the main thing here. We uncovered that under the original specific plan, not a lot of people know this knowledge, we could increase the density to 134 lots. So we're going to remap it from 91 to 134. And that's the specific plan. So we don't have to do anything, any zone changes, nothing like that. We just have to remap it. So it should be quite a quick and simple, streamlined process there. And that's a major value shift. You know, it's all because of our team's deep entitlement knowledge and insider access right there. And the benefits are big when you do something like that. So fewer infrastructure costs per unit and higher returns on the same land. Faster approvals because it's under the specific plan already approved. And we're working with an existing plan. We just need to go that 1.5 year entitlement timeline. And this is exactly the kind of overlooked value we specialize in unlocking. You know, the previous developer who did the 91 lots didn't know what he was doing, didn't know you could get extra lots there. So we're getting at extreme value. It's a quick deal, targeting a 1.5 year hold and a sale of just over $5 million with an exit ROI to the investor of 154%, all with a short runway and a builder demand already in place. So that wraps up all 4 deals of the pipeline, each with a clear strategy, strong upside, and real momentum. So, I mean, this is what we've been doing for the last 40 years, and we're looking forward to having